Hello and welcome to another episode of the Minor Issues Podcast. I'm Mark Thornton at the Mises Institute. Well, we're going to end the year by starting a contest for 2025 to see who can accurately forecast what does better in the market this coming year, Bitcoin or gold. And I'll get to the details of that contest at the end of this episode. For the year-end episode, I want to look forward to 2025 and a little bit backwards at 2024 and project to see what we might see coming in the new year. Now, first of all, it's worth noting that my prediction for a recession beginning in the fourth quarter of 2024 obviously did not come true. The economy is still producing positive GDP growth, and so we'll just have to see what happens going forward. It's always possible that the official people in charge of dating the recession will come back 6 months from now and saying, yes, the recession did begin in this quarter. But for now, we're going to be looking more at the forecasts and the wish lists for 2025. And I'll start with the Federal Reserve itself. The Fed has a very rosy outlook for 2025 for us, so I suppose that's a good thing. They anticipate positive GDP growth throughout the coming year. They've actually cut back on their projections regarding interest rate cuts in 2024, where they've cut them from 4 or more interest rate cuts in 2025 down to 2. So they see the economy percolating, and they see inflation continuing to moderate and move lower despite recent reports. And they don't anticipate any problem in the labor market. So basically, they think that 2024 was a great year and that 2025 is another great year coming, and they don't foresee any major problems. Of course, they've been asked about various changes with the Trump administration in terms of the tariffs and so forth. But again, no problems ahead, according to the Fed. 2024 ended with basically with stock markets and precious metal markets going up relatively about the same in the mid 25% range. Now that, of course, brings joy to investors across the board. But from my perspective, multi-years of 20 plus percent returns in stocks makes me think of an overheated stock market, artificially subsidized by Federal Reserve money creation activity. And then even with gold and silver up, in the range of 25% and having more than 1 year of gains behind it, that's also problematic because those type of gains are usually a sign of monetary disturbances, monetary uncertainty, if not monetary chaos. So from my perspective, looking at 2024, those are both causes of concern because of the very high rates of returns on the high growth tech stocks and also the precious metals and, of course, cryptocurrencies as well. And of course, Bitcoin was one of the real big winners, and cryptocurrencies were one of the big winners as a group. So the fact that all three of those areas are seeing above average returns is an indication of some problems. Now, my personal wish list, I'd hesitate to call, I wouldn't even call this a forecast, but at the Minor Issues podcast, one of the things that we're concerned about, or that we target are concerned with, of course, we're concerned with everybody and everything, but we're most concerned with the younger generations, future generations. And for this group, we see a lot of problems here. In particular, the problem of debt. The problem of government debt is pretty obvious. We're running projected $3.5 trillion deficit in this coming fiscal year. And of course, we've set all-time records approaching $37 trillion of national debt, but also, in many, many categories of debt: credit card debt, student debt, corporate debt, real estate related debt, automobile debt. I can't think of any category where we've made any progress on that. So the country as a whole, the government, and all the various sectors, including business and consumers, have borrowed enormous amounts of money last year and in recent years, and that's pretty much projected to hold true. Now, in terms of my wish list for future generations and younger generations, one of the things that we are most concerned about is the affordability of housing and new family formations, which tend to go hand in hand. I mean, if you're forming a family and having children, housing is of utmost concern. And right now, the United States and many other countries have hit all-time low marks for housing affordability, the availability of housing, housing that's on the market, and of course, high mortgage interest rates, all point to the fact that housing is not affordable, not readily available. And so one of my primary wishes is to see housing become much more affordable in 2025. And I don't have much hope that mortgage rates are going to come down, but possibly we might get lucky and housing prices may crash or come way, way down in 2025, along with other real estate markets, commercial real estate of various types. That would help entrepreneurs form new businesses and create more jobs. So we look forward to big decreases in real estate prices and increases in affordability. College, I think a lot of my audience is very concerned with college and the high price of college. It's shocking every time I get bits of information about the cost of higher education, the prices that people are paying, the prices that people have to pay for all of the various components of getting a higher education degree have just gone up tremendously, and the amount of debt that people incur to get degrees is just enormous. And simultaneously with that, the value of a college degree also seems to have peaked and is heading lower. Now, that doesn't mean every degree, the value of it, the economic value, is heading lower, but there's a widespread perception out there that there are a lot of degrees that are not worth getting anymore, so that the affordability issue for higher education and career advancement is also problematic. So we can look forward to possibly, hopefully, much lower cost of tuition and other expenses associated with getting a college degree. Another big negative for younger generations right now is that the prices of growth stocks are just astronomical. The valuations that have been put on the growth stock component of stock markets, where younger people, it makes sense for them to invest in growth stocks. But right now, the prices of growth stocks are just through the ceiling and are extremely high. And even to the point where you get a lot of people who typically wouldn't invest in growth stocks, senior citizens, retirees, that sort of thing. They're invested in growth stocks. So hopefully we can look forward to much lower prices for growth stocks, so that younger people have an opportunity to invest in the things that typically make sense for them, where they can buy growth stocks at low prices and see, a lot of appreciation in those stocks over periods of decades or longer. So those are some of the things that I'm looking forward to for 2025, things that can help younger generations and future generations and family formation and so forth. Those are just as much long-term problems in the United States as anything else, really. And we don't want to take our eye off of those longer-term structural problems in our economy to focus intensely on the issues of the day that the mainstream media is interested in, that politicians are pushing, and that the mainstream media is pushing as the topic du jour. So 2025, we look forward to more opportunities across the board for lower costs across the board, and most especially for less debt, particularly by the government, which is imposing a tremendous burden on future generations. It's a burden that they're not voting for, that they're not consenting to, but that's being placed on their backs, whether they like it or not. So thank you for listening in 2024. I think it's going to be an exciting year in 2025. I think there's a lot of great issues that I've discovered that I'm going to be talking about that aren't mentioned at all in the mainstream media, or if they are mentioned, they don't never bring the perspective of Austrian economics. So stay tuned for 2025, and stay tuned for the guidelines on how to put your guesstimate in for which investment is going to do better in 2025, Bitcoin or gold. So if you are interested in joining our little contest to predict what will do better in 2025, Bitcoin or gold, click on the link below in the description. And basically what you're going to do is pick a numerical guess of what does better. So if Bitcoin and gold go up in the same percentage terms, you would want to guess 1.00. If you think Bitcoin is going to do better, then you would guess a number higher than 1. If you think gold is going to do better, you would guess a number less than 1. So if you thought that gold was going to stay exactly the same and that Bitcoin was going to double, then you would guess 2.00. If you thought that gold was going to double and Bitcoin was going to remain exactly the same, then you would guess 0.50. So it's a simple number that you're going to enter in the link below, and it's basically dividing, Bitcoin and the gain in Bitcoin divided by the gain in gold, where both categories are equally weighted. And so your guess is going to be, 0.79 or 1.29 or whatever it happens to be. But a number greater than 1 suggests that Bitcoin is going to do better than gold, and a number less than 1 suggests that gold is going to do relatively better than Bitcoin. And whoever gets closest to the actual results a year from now, I'm going to send you my personal leatherback copy of the quotable Mises, and of course I'll sign it, and you will be king of the hill for 2025. So please help yourself to guessing. I think I'll keep the guessing open for a few weeks, and I'll be talking about it in future episodes. Thank you.